Hey everybody, Rob Maurer here, and today we're getting back to a little bit of the news that is not as AI Day focused, though we do still have some updates there. But first thing we're going to talk about is July production numbers for China. Those are always interesting to see, and we'll see what that might mean for the rest of Q3. Then we have new job listings for Tesla related to the Tesla bot. We've got a couple updates on full self-driving, analyst reactions to AI Day, Tesla energy news, macro news, and more. So we'll start off with the China production numbers. Remember, we always get these a few weeks after we get the sales data, wholesale and retail sales. And while those are somewhat helpful, they don't give us as much of an indication of how much progress is being made because they're subject to influence by exporting decisions and things of that nature. So these production numbers give us a much better feel for how the quarter is going. So Cooke shared these out yesterday, and reported production for July is 23,227 Model 3s, 13,825 Model Ys, for total production of 37,052 vehicles. Putting this into our China tracking table, we can see that this is actually a new record production month for Tesla. Production was up about 20% month over month from June, and it did edge out May's previous record by about 200 total vehicles. So 37,000 reportedly produced. We had previously discussed the 33,000 reportedly delivered in China and exported in the month of July. So the other set of numbers that I have highlighted here is production versus those wholesale sales, and production obviously outpacing sales by about 4,100 vehicles. So if you were paying attention when we went through those sales, I'd highlighted this as a possibility due to the inventory outflow that we had seen in June and the high exports that we saw in July. Perfect example of why no one should be overreacting to those wholesale sales numbers. Those were slightly down month over month for July, but again, here we see production up 20%. That sets up a situation where we get the opposite effect either in August or September, where inventory drains and sales overachieve production. And at that point, that'll be reported on likely quite positively. So let's flip over here to our production tracking spreadsheet. I think most of you by now are probably familiar with this layout. So let's just go ahead and focus in on that bottom right corner where I have Shanghai production by month, and then that's broken down to a weekly rate level. So if we look at the furthest right column, we can see Model 3 production per week in Shanghai, and it was 5,245 units per week for July. And that's actually a new record weekly rate for the Model 3 for any month. Not a huge increase from previous levels, but the overall increased production here not just coming from Model Y. As for the Model Y, you can see that was about 3,100 per week, and that was below the 3,400 weekly rate for Model Y in May. So still plenty of room for Model Y production to increase there, even just to prior levels. We'll talk a little bit more about that in a second, but if we zoom back out, we can see that high level, that 37,000 production for July. That was about 6,500 more vehicles than Tesla produced in the first month of Q2, meaning Q3 is off to a pretty significant early lead. So I mentioned Model Y production. We got a report on Friday from Wuwa, who does drone flyovers of Giga Shanghai, that after a little bit of downtime, the quote, production capacity of Phase 2 Model Y has reached 1,000 units per day. This daily capacity has exceeded the number of Model 3s, 800 units per day. It can be said that the Y-type production has entered high yield stage, end quote. All right, very interesting there. So for July, Model 3 production was 750 per day. Model Y production was only 445 per day. Anytime we see production rates like this, it's important to consider that they may not include downtime, which there's always going to be some of. So I think a good way to transpose this, I guess, would be to compare to that 750 per week of the Model 3. And the rate here that's stated 1,000 versus 800, that's 25% more. So maybe they don't get to 1,000, but that would come out to 935 per week or so. Maybe they can get to that level 25% above where the Model 3 is at right now. This happened in August, but let's say that Tesla's able to achieve those types of rates for September. That would be 28,000 Model Ys and 22,000 Model 3s for just over 50,000 vehicles total. Now, that's not necessarily my forecast, that's just kind of a best case scenario, but then let's just look at how that might round out Q3. So for that middle month, August there, let's just say that Model 3 holds steady. Model Y sees a bit of an uptick from July because of this increased production towards the tail of the month, but remember we do have those 4 days of downtime too. So considering all of that, maybe 15,000 is realistic. That puts August maybe somewhere around 38,000, pretty close to July. But then putting those 3 months together would yield just over 125,000 vehicles from Shanghai for Q3. Again, not necessarily a forecast, just to look at what might be possible this quarter. Obviously, any sort of supply chain challenges could limit that significantly. In the spirit of what's possible though, let's take a look back at Q2. There was 108,000 vehicles produced in Fremont in Q2. So let's say that holds steady and then we add another 10,000 or so Model S. And by the way, fun little secret about Q3, there is one more day in Q3 than Q2, which can actually make a pretty material difference. Anyway, let's say it's 118,000 from Fremont, then 125,000 there from Shanghai. That'd be 243,000 combined, which again, not necessarily a forecast, but is a number that I do actually think is possible for Q3. That'd be up 18% quarter over quarter. We've definitely seen Tesla put up numbers like that before. By the way, that would be pretty darn close to a million vehicle per year run rate. So I'm excited to see how Q3 shakes out. I've been excited to see how Q3 shakes out since probably Q4 last year, but it's going to be a great quarter. And of course, as usual, as we get closer to quarter end, I'll give my forecast for deliveries, production, etc. All right, next up here, we've already got some fresh Tesla bot news thanks to Space S3X on Reddit for pointing this out, but Tesla has already started listing jobs to work directly on the humanoid robot. So there are 2 actuator jobs here, and there are 2 robotics architect jobs here. Aside from just the listing of the positions, what I found most interesting was a little snippet of the architect jobs job description. It says, quote, "You will be working closely with a multidisciplinary team with the goal to build a humanoid robot that can support manufacturing operations in tedious and exhaustive tasks," end quote. So a clear emphasis there on manufacturing operators, which is maybe not all that surprising, but I did kind of ask Elon a question along these lines, trying to get a better understanding of AI and the Tesla bot's role in manufacturing. And although it did sound like the concept really came out of Tesla's expertise in some of these different areas that would be required for a project like this, looks like manufacturing is a very top of mind first use case. My guess is that the first actual work doing Tesla bots, not just demos, that we see will be on Tesla's manufacturing lines. The other wording that I found kind of interesting in here is that it says support manufacturing operators. It brought to mind for me Elon's consistent comments about taxi drivers or semi-drivers instead of driving, eventually becoming fleet operators. And this is written in that exact same style but applied to manufacturing. So kind of interesting to me, but either way, cool to see these job listings already. As for the other main vessel for Tesla's AI, we got a bit of an update here on the FSD Beta from Elon, which we're just going to talk about quickly because it spawned a whole lot of articles the last couple of days. Elon replied to a whole Mars tweet of Sandy Munro testing out Ford's Blue Cruise driver assist. It didn't really go all that well. Elon replied to that saying, quote, "FSD Beta 9.2 is actually not great in my opinion, but Autopilot/AI team is rallying to improve as fast as possible. We're trying to have a single stack for both highway and city streets, but it requires massive neural network retraining," end quote. So cue up the articles about Elon Musk saying that FSD isn't great, but obviously you need to consider the context here, and Elon did reply to that, adding that, quote, "Just drove FSD Beta 9.3 from Pasadena to LAX, much improved," end quote. So there we go, not much more to add to that, but hopefully we'll see a 9.3 release this Friday as the 2-week schedule would indicate. All right, next up here, I just want to run through quickly a couple of analyst reactions to AI Day. We won't spend much time on this, but just to kind of get a headline view of what analysts are saying, what the reaction on Wall Street is. We'll start here with Morgan Stanley. Kind of the headline they went with was, quote, "Tesla is running one of the world's largest and arguably most ambitious R&D laboratories to tackle the world's hardest problems. Investors can't resist funding the effort," end quote. So I guess good start there, but the last part there is a little bit lost on me. Tesla hasn't raised capital for quite some time. They seem to be in a very strong cash position right now. And a lot of the rest of the note spent time talking about Tesla's access to capital, which yes, they do have in spades, but I'm not entirely convinced that they really need a whole lot of extra capital right now. Obviously that could change. I'm sure Morgan Stanley would like them to raise some capital, but anyway, they were relatively positive about AI Day. Next was Wedbush, Dan Ives. They've got a $1,000 price target on the stock, but I think they took a little bit more of a short-term Wall Street type of view on the Tesla bot, saying, quote, "Unfortunately, as we have seen with robotaxis and other future sci-fi projects for Musk, we view this Tesla bot as an absolute head-scratcher that will further agitate investors at a time the street is showing growing concern around rising EV competition and safety issues for Tesla," end quote. Continues on to basically make the plea that Tesla should focus more on what Wall Street cares about versus things like the Tesla bot, which, yeah, I think it's safe to say I don't agree with that. And like we talked about previously, the Tesla bot isn't about distracting from the other things that Tesla's working on. Tesla's not taking people from Giga Shanghai and having them work on the robot. It's about attracting new talent that wants to work on projects like that. Last couple were a bit more positive. So Deutsche Bank, they have a $900 price target on the stock, said, quote, "We came away with greater appreciation for Tesla's efforts in AI. Big picture, Tesla outlined a very ambitious effort to develop a high-performance neural network with very scalable underlying compute and accurate plus fast data labeling. This effort creates a positive feedback loop where the system can continuously learn and improve faster than what we think any traditional competitor can achieve. Moreover, this compute platform could ultimately be sold as a service to other machine learning use cases, especially those that require massive scale, which we think Tesla itself will explore with its humanoid bot in the coming years." End quote. Finally then, Pierre Ferragu of New Street Research sharing some thoughts on Twitter, basically expressing the question of how is anybody else going to be able to compete with Tesla on autonomy, and then concluding with, quote, "Tesla is years ahead of anyone else for real-world perception AI and autonomy, has a fully integrated operation with the highest pace of innovation." Rings a bell? Tesla is in AI exactly where Tesla was in cars in 2011, end quote. All right, next up here, this is a bit of news from last week, but we didn't get a chance to cover it yet. So this is from Clean Technica. They noticed that Tesla has applied to become a retail electric provider in Texas. Not the first time we have seen this from Tesla. Tesla has also done this in Australia, in the UK, recently Germany as well. And we don't really have a ton of information about how those things are going or what the financial impact is or anything like that. Obviously still pretty small at this stage, but does look like it's continuing to expand. All right, last couple of items here. First up, we've got some news reported on the Ford F-150 Lightning by Reuters yesterday. They are citing sources that Ford is doubling their annual production targets for the Ford F-150 Lightning up to 80,000 units for 2024. Apparently, they plan to ramp up production from about 15,000 trucks next year to 55,000 2023, then up to 80,000. And then in 2025-ish and beyond, late 2025, the annual target is apparently a little bit less than 160,000. So this is kind of the news that we've been waiting for since the F-150 Lightning unveil. How many of these things are they actually going to produce? And it's less than I would have hoped for, but probably about what I would have expected. Ford sells around 1 million F-Series every year, so at 150, 160,000 per year, even out to 2026, that's only about 15% that they're going to be able to convert over to electric. Probably not enough and probably not fast enough. Hopefully they will reconsider and double that target again. Last set of updates then, a couple of macro stories. So first up from NHTSA. Last week NHTSA said that they are examining imposing higher penalties for automakers failing to meet fuel efficiency requirements from 2019 and forward. Sounds like this was kind of a last minute change as the previous administration was on its way out earlier this year. Not exactly clear on what transpired there, but apparently according to Auto News, quote, "In March, Tesla urged a U.S. appeals court to reinstate the higher fuel economy penalties and said the Biden administration ignored the ongoing impact of the Trump rule on the credit trading market," end quote. Tesla apparently argued that that had made credits less valuable, so I'm not sure if any change here would help them retroactively or just for 2021, but a final decision is something that I'll definitely be keeping an eye out for. Sounds like right now it's just posted for public commentary for about 30 days. The last thing on the macro then is that the House of Representatives is back in session, and today they did vote to pass the $3.5 trillion budget resolution. Now remember, this is just a budget blueprint. As a budget resolution, this allows it to go through reconciliation, where the final details of what's exactly included, the breakdown of that budget, will be determined. So we're not wrapped up on that topic yet. We'll continue to hear a lot more about it in the coming month. And then the House also advanced the $1 trillion infrastructure bill, and I'm a little bit less sure on the status of that, but it sounds like there was also a non-binding commitment to vote on that infrastructure bill by September 27th. Not sure what that next vote is exactly, though. If there does end up being an EV tax credit, that'll be in the budget rather than that infrastructure bill. So that is it for today. Quick note for tomorrow. Editor Jasem's got some other things going on, so we're going to be doing live streams the rest of the week. So get ready. Anything could happen. Most probably some audio technical difficulties, but we'll do our best. Anyway, as always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and I'll see you tomorrow for the Wednesday, August 25th episode of Tesla Daily. Thank you.